Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Just looking at the major industry groups in the S&P 500 today, there are 11. Your best performing group, financials, but they were still down about 0.4%. Bottom of the pack, energy was down about 2.5%. Real estate was down about 2.5%. Consumer discretionary down about 2.5%. Materials down almost 3%. All 11 of the main industry groups are down today. Let's see what Vince Signorella makes of the trade that we've seen, not only today, but since the tariffs were imposed. Vince, of course, is Bloomberg macro strategist joining us. So, Vince, it looked like we did have a rally, and it looked like maybe it would hold. And then that was not to be the case, as it looks like trade tariffs and talk about that between the U.S. and China flared up again. Talk to us about the trade today and what was significant for you.
Well, I mean, the tariff is the tariffs are the word. Tariff is the trade. There was a little bit of excitement this morning when Trump was announcing potential deals with South Korea and Japan, and that Italy's Meloni was coming in a couple of weeks to discuss trade. So things were looking on the up. And then the reinforcement that China tariffs was still with us, and we're going to hit it about 104% tonight. That was confirmed, or reconfirmed, I should say. And the reality, what we heard from Trump this morning was, China wants to do a deal. They don't know how to contact us. I mean, they went to the WTO this morning complaining about tariffs. So that's hardly a country looking to do a deal with the U.S. And it's really unlikely that President Xi is going to be knocking on the White House door with hat in hand, looking to do a trade with Trump. So this is going to be extended for a while, I think. And that's
extended in what sense? Like, we know the fight's going to be extended, but the carnage that we're seeing, if you're long equities, how long is that going to be extended? What turns that around? I mean, stocks have been in free fall for the last 4 days.
Yeah, it's a really, really good question. Talking to traders today, we're definitely seeing some folks stepping in at the close, getting their toes in the water. The extension that possibly that people are talking about is 4,500 in the S&P cash. We're still about 400 away from that, but there's going to be a lot of give and take, and even if that happens, there's just a lot of talk, and I don't want to really go into this too much because it's just a lot of scuttlebutt on the street about if things continue like this, will the Trump administration look for a scapegoat? Will it be Lutnick? Will it be Navarro? And traders today are putting more bets on Navarro than Lutnick.
So what would that do to markets if Navarro got the boot? And look, again, you're saying this is scuttlebutt.
It's totally rumor, just totally conversation on the street.
But would that actually
no fact to this whatsoever? But if Navarro would get the boot tomorrow, you probably see about a 2,000 point rally in the Dow, to be honest.
Well, it's so funny that you say that, because we were talking with our Max Chafkin about some of the back and forth between Elon Musk and Peter Navarro, and there's been some speculation. Again, rumor, careful, let's be smart here.
Yes,
but that
totally, yes.
But that the president, looking for an off-ramp, and I guess we just assumed it would be in deals with countries, but you do wonder if he is looking for some individual to say, listen, that was his plan, maybe it was wrong. Let's get him, let him go, and let's redo this. But again, who knows, right?
Yeah, I mean, I think what you said, the former part of that is really where it's going to come from. You're going to see deals getting done.
Okay.
And I think the administration is going to be touting more the deals getting done in the next couple of weeks, as opposed to deals not getting done, as in vis-a-vis China. And I think we're going to start to see a little bit more positive comments come out of the White House to turn this a little bit. Don't forget, we've even seen the Republicans pushing back against Trump, where they tried both in the Senate and some in the House, trying to basically impose a bill that basically says Trump has to go through the Senate and the House in order to impose tariffs. It's dead on arrival. It's not. It's not even.
Said he would veto it.
It's not going to pass. Absolutely. So it's DOA. It's not going anywhere. But just the idea that they would even consider that and that his own party is pushing back is definitely going to have some conversation going on in the White House. And I think it's very, very interesting that in the last 24, maybe even 48 hours, we haven't heard a peep out of Ludnick. And he's been the real bull in the china shop, if you will, in the same camp as Navarro, talking really tough on trade.
Okay, so maybe that's the case.
Quiet.
Who we have heard a lot from is Treasury Secretary Scott Bessent. What do you make of that? He's been out each and every day.
Yeah, he's not going to go against Trump, but he is, again, in terms of what the market sees as a voice of reason. So he's more likely to put a positive spin on things than a negative spin on things. Remember, like the rumors yesterday with Hassett, where he said Trump was going to consider a 90-day pause. That headline was complete fiction, came out of a conversation on Fox, which was an elaboration on very something Hassett said that it really had nothing to do with a pause. And you saw the market react like surging on that news. They're desperately looking for good news to buy into this. People do have cash. They do want to get into this, but you just don't want to step in front of the steamroller right now because it's still coming, as we saw today. Although, like, think about, like, in the last 15 minutes, the Dow was down over 800, down 320 into the close. So there's still a lot of possibility for this to turn around, but I would just be really careful. If you want to dip your toes in a little bit, it's not a bad idea. But definitely don't be sticking your head through the door.
Vince, it's, I want to go back to this idea that, if we saw a head roll,
I ain't jumping in.
If you say, if you see a head roll, we could see look, we kind of saw this yesterday with this 90-day reprieve, read all about it on the terminal. Great stories from Bailey Lipschultz and more about what happened yesterday. Carol, you were out, but it was crazy.
Yeah, I know. Okay. It was. Believe it or not.
You paid attention?
Occasionally I was like reading in because I hate
I
missing volatility.
could feel your FOMO.
I was.
But Vince, if we were to see a head roll, that doesn't necessarily mean that Trump would back off this policy. He told our editor-in-chief, John Micklethwaite, before the election, tariff is his favorite word in the English language.
Yes. I remember that conversation very, very well. See, what people really need to understand is and forget about the short-term view. Oh, the markets are going down. Trump's going to change his mind, this, that, and the other thing. He really, really isn't attempting to rewrite economic policy for the United States for the last 40 years.
Right.
He wants to bring us back before globalization, before the Clinton globalization years, more towards that 1988 Reagan, 1992 George Bush kind of concept, where trying to bring manufacturing back to the United States. The only way he's going to do that is to somehow undermine and cripple the manufacturing state of China. And the only way to do that is to outlast them. We can't outspend them. We have a 36 and building $1 trillion deficit. This isn't Reagan against Russia in the 80s, where he outspent Russia and sort of won that war, if you will.
But to be fair, Vince, and this is something we talked about Tom Orlick earlier. I mean, we have a $1.2 trillion trade deficit with China. Mm-hmm. And I mean, that's real money, right? And the whole reason that American companies wanted to be in China and they set up shop there and so on and so forth is they wanted to tap into the 1 billion plus consumers of China. And it hasn't necessarily worked out as well as some might have anticipated. And so this is about, I feel like, or is it about US and China, or China kind of playing more fairly in a way in terms of trade back and forth?
I think so. If you look at globalization, the idea of globalization was we were going to float all boats. So we in the United States, for instance, and the developed countries, I shouldn't say just the United States, we were going to invest in underdeveloped countries and such. We were going to lift up their economies, and then they were going to buy our goods.
Right.
And all boats were going to float, and everyone was going to prosper. Well, that didn't happen. If you look at globalization in and of itself, it was a failed policy. What happened was the developed countries spent a lot of money into underdeveloped countries, and they didn't buy anything of ours. We just bought a lot of their cheaper stuff. And that created deficits across the developed nations, mostly, of course, in the United States, because our consumers spend more than anyone else in the world. And so What Trump is trying to do is recalibrate that. And, you can't fix it all in one day, but bring it back a little closer to the middle, where essentially we get some meeting of the ways where we get a little bit more of a balance in trade.
Yeah, maybe you can get Japan to buy more U.S. autos because we buy so many autos from Japan. That, for example. Sure. But is there a way, in your view, to actually go back in time? Because I think the ship has sailed. The genie's out of the bottle. That seems to be like, this is not a world of 40 years ago. This is a world where, we're using WhatsApp to connect with people all over the world right now on devices that are made with components that include Africa, Asia, Europe, the United States. Like, this is a different world that we live in. We're not making clothes in the US that we wear.
Yeah.
Like, this is a completely different world.
Yes, and we're not going to be we're not going to be making textiles, cheap textiles in the United States. I think realistically, the manufacturing he wants to bring back to the United States is a bit more high end, where he's talking about autos, for instance, chips, things of that nature. We're not talking about making sweaters and socks in the United States. It's more on the high end stuff. And setting perhaps in the high end of things a more level playing field, as opposed to what happens now. And look, you have to think of it realistically. All of the rhetoric out there is saying tariffs are bad, tariffs are bad, tariffs are bad. Well, if they're so bad, why do so many other countries have them? To some extent, it's definitely benefiting a lot of other countries, and I think that is what he's trying to do, just to get a little bit of a fairer trade situation.
Right.
As you mentioned, we're not going back to the 1980s. We're not going to, steel mills are not just going to be propped up all over this country tomorrow.
But we have gone back to Smoot-Hawley. I'm just going to say, going back further. I know. Love it, love it. Just for those on radio, Vince actually rolled his eyes on that. Having said that, Vince, I want to go back to the market. We technically intraday saw a 20% correction on the S&P 500. So technically hitting a bear market. We bounced back off of it. Is that significant that we didn't close there?
I think we'll wait to see how we do overnight and how China markets or the Asian markets react overnight. I mean, we could easily see us testing again tomorrow into the U.S. session, depending upon the rhetoric. I mean, how's China going to push back tonight? We don't know. Yeah. We don't know what kind of comments we're going to get from Xi or other trade ministers from China. We've pushed them pretty hard. And to expect them again to come to the table is naive, I think.
What's the commentary that you're finding as you talk with traders throughout the day? I mean, yes, it's a lot of selling. Yes, the markets have functioned well. For those of us who were here during the great financial crisis, it was crazy. And you really felt like, yes. I mean, I just remember thinking, oh my God, the financial market system.
It doesn't feel like that to you now, though.
It doesn't.
No.
I mean, I think everybody clearly understands why the market is selling off. There is a clear catalyst, and we
Some
understand.
might call it self-inflicted.
Yeah. And so, exactly. So what do people say about the market selling about this, and when does it become something much more problematic than an understanding that it's coming from the White House directly?
Well, I think the end game, I mean, obviously the administration's end game, and I think everybody would kind of think the same. If you look at this in the more medium to long term, this will pass. As if you think about the financial crisis that you mentioned passed, I can remember the crash in the late 80s, looking over my shoulder, and every time I looked over at the teller rate, which was back then, and seeing where the Dow was going, oh my God, we're still going down.
Yeah.
The sell-off of this magnitude, I think it's different in the sense that it's all happening in kind of 1 week, and then not just the sell-off, but the volatility. We're down, we're up, we're down, we're up. It kind of reminds me of trading currencies back in the 80s. This is a kind of volatility that we saw in currency markets 45 years ago. You don't really see it in equity markets so much. So it's unusual, and it's different. And I think a lot of folks in equities are just not accustomed to this. And I don't think any traders are really accustomed to this. Since we've gone electronic, we haven't had this kind of vol.
Vince, is there like
is
there a technical signal that you can glean from stocks starting higher, then losing that momentum, and then finishing decidedly in the red?
You look at this and you look at, these are ugly tapes. I mean, without question, you don't like to see this kind of price action where you start out high in the morning and you have this positive euphoria and then this sort of puke into the afternoon.
That's a technical term, right?
Continuing, puke is definitely a technical term. And into the close. But I will say there was a positive to the close. I mean, we were down about 850 points, I think, in the Dow. We closed down around 320. Yeah. So there was definitely some capitulation, some buying. We're starting on just glancing over futures is still trading lower as we head into the last hour before the break at 5 o'clock. So we are seeing a little bit of a sell-off in futures. It's not terrible. It's not aggressive. We have inflation numbers coming on Thursday and Friday, sentiment numbers coming on Friday, and we start the earnings season with banks on Friday. So my guess is the earnings bar is probably going to be set pretty low for next week and for the banks on Friday. So there is a very good chance we get some good numbers. And if the tariff conversation just quiets a little and we get some positive earnings next week and a good week of earnings, we could easily see this rebound dramatically.
Well, listen, around the markets we went with you. Thank you. Vince Signorella, Bloomberg macro strategist, joining us here on this Tuesday.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
From Wall Street to Capitol Hill, because politically this trade war is creating divisions in the Republican Party. Republican senators expressed anxiety over the potential economic toll of Donald Trump's global tariffs and pressed his trade representative for more clarity on the president's objectives in the trade conflict. Check out what Tom Tillis of North Carolina said today. Quote, "Whose throat do I get to choke if this turns out to be wrong?" This was as U.S. Trade Representative Jameson Greer testified before the Senate Finance Committee. You got Ted Cruz extending his critique of the tariffs. And then, Carol, you got to note Elon Musk, the billionaire presidential advisor, he attacked White House Trade Counselor Peter Navarro as dumber than a sack of bricks over this fight, this tariff regime spilling onto social media today.
We want to ask what Wendy Schiller thinks and makes of all of this. She's professor of political science at Brown University, joining us from Providence, Rhode Island. Professor Schiller, great to have you back with us. It does feel like some Republicans are getting a little uncomfortable with some of the president's policies. How do you read it?
Well, good afternoon, Carol and Tim. I think this is going to be an interesting sort of power play within the Republican Party, and it will spill over to the tax cut bill, because the only leverage that the Republican senators have, even vis-a-vis the House Republicans and President Trump, is the tax bill, which President Trump really, really wants as an accomplishment, particularly for this year. So, if they're not getting the answers they want, if they want to protect particular industries in their states, even at the most local level, big businesses that are suffering from these tariffs or will suffer from the tariffs, they're going to have to play hardball with the president's most preferred legislative package, and that's the tax cuts. So you're going to start to see behind the scenes, but also maybe publicly, Rand Paul's been pretty out there from Kentucky saying he's not happy about this either. And I think that's what's beginning to disrupt the inter-chamber negotiations on the tax bill between the House and the Senate.
How much power do these members of Congress actually have? Because the president has shown he is not afraid to support primarying some of these folks if they don't get behind his agenda.
Yeah, his Trump's success record in primaries in the Senate level, at the Senate level, is not all that great. His success is a little bit better on the House side, but not really on the Senate side. And you mentioned Tom Tillis, who's running for re-election in North Carolina, Joni Ernst running for re-election in Iowa, just to name a few. And so those seats, particularly North Carolina, could be heavily contested. Let's say the former governor, Roy Cooper, wants to run. That's going to be a problem for Tom Tillis. So they've got to show some returns. What is the end game on the tariff fights? What does he expect to accomplish, President Trump? As you say in your prior conversations, you're not bringing textile manufacturing back to North Carolina. You have had a resurgence on a micro level of some companies making things in North Carolina.
Yeah, that's artisanal stuff, I think people would say. Truly.
Well, no, I mean, my understanding, I think there's a couple of companies that have taken over factories and done pretty well. But, what is Tom Tillis going to say to North Carolina when things really become more expensive or inflation goes up and the tariffs are to blame, unless Trump pulls the plug on the tariffs before those kinds of inflationary pressures can really exert their will?
Wendy, what do you think is the end game? I mean, President Trump has talked about tariffs for a long time, right? This has been part of his playbook, and he didn't get to do as much as I think it's safe to say that he hoped to do maybe the first time around, doing something a lot more aggressively this time around. He likes tariffs. He's said that. But I do wonder, too, I agree with you. What is the end game? Is it to get Europe to spend more on defense? Is it energy policy? Is it access for us to critical minerals? Like, what is it? Do we really understand what the end game is with all of this yet?
It's just unclear from the current public conversations that are leaking or being, leaked on social media or even just playing out on social media, what the team of advisors agrees on the end game, whether Trump is willing to even think about an end game. But what he'd like to do is probably go to a plant that was abandoned or shut down temporarily a couple of years ago and see it reopened. I mean, the only way you're going to convince the American people that paying more for all these goods, or small businesses that might have to lay off people, is that you have succeeded in creating jobs or bringing real jobs back. And that isn't happening quite yet. And that was the problem in the first administration. Very hard to do. He could not even prevent plants from closing down and going to Mexico. NATO defense spending will make some people happy, but the average American, I don't think is going to care very much about that.
To be fair, is there something, though, in the president's fight, right? We've talked with you about the gaps, right, within our society, that there's a bunch of people who feel like nobody is representing them. They can't get ahead. They can't buy a house. They can't get a good job. I was reading, I think this morning, about people who are making $40,000, $50,000 here in New York, and yet they go home to shelters because they can't afford to live in an apartment. So there's something wrong, some disconnect. So is there something to what the president is doing, whether it's with China, in terms of leveling the playing field about access to markets?
Well, access to markets is fine, but in the United States, you have a combination of a lot of regulation, which makes making things more expensive. You have, we have weaker private sector unions than most of Europe does, for sure. We have some pretty strong public sector unions. So you'd have to sort of weaken the private sector unions, right? I mean, you'd have to do something like that to make it less expensive. He's going to eliminate a lot of regulation, which will make everybody happier. And that will mean slightly less environmental protection. There are trade-offs for everything we're doing, but it is more expensive to manufacture goods here, I think, for lots of reasons some people might like and dislike. So you have to dismantle that system. But if you're also dismantling healthcare and education, we're not going to stay competitive with the countries that are investing in those areas. So, the Trump administration has to have a holistic approach to this. And right now, I'm not sure we're seeing the things coming together, working in the same direction as much as we might like.
When it comes to negotiations directly with China, in your view, Wendy, how much leverage does the U.S. have?
Well, we have an awful lot of manufacturing in China. The farmers themselves, they export a lot to China. We are very dependent on China. There's also intellectual property. We haven't even heard about that from Donald Trump. Intellectual property theft. That was the big theme in his first administration. What's he going to do about that? I think it's a very difficult relationship to extricate from. But if Trump can get some manufacturing back, or at least, make corporations reopen or build plants here, do something like that, then it shows the Republican Party that this is a policy that could benefit them politically, which moves them closer to Trump, not further away. But that's a couple of years away. And the House elections in 26 just seem closer and closer every single day.
How do you think about this era? It's still being written as we speak. We just got about 30 seconds. How are you're teaching? How are you thinking about this? Just quickly.
Forget everything that I've been teaching for a very long time. Forget everything you thought about strategy and motivation by the president and his team. This is a new day, a new way of doing things. He's disrupting, and we're all going to have to be very flexible and be able to pivot. But also, local politics. That's the thing. When does the House Republican Party break from President Trump, if ever?
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Hey, it is time for another edition of Bloomberg Plugged In. It's your weekly look at EVs, and we are watching the auto sector closely. Given that a 25% tariff on U.S. auto imports took effect last Thursday, while a levy on parts is slated to begin no later than May 3rd. The measures are expected to dramatically increase costs and upend supply chains. So let's talk to one of those suppliers who's smack dab in the middle of all of this. Magna International is a Canadian-based auto parts and auto tech company. They create components. So think car electronics, drivetrains, vision systems, powertrain systems, and more for some of the biggest car companies in the world, GM, Ford, Stellantis, and more. The company has more than 170,000 employees across 28 countries. And by sales, it's the biggest automotive supplier in North America. They've got a market cap of close to $9 billion, though its stock is down about 25% so far this year. Swamy Kotagiri is CEO of Magna International. He joins us this afternoon from Troy, Michigan. Swamy, thanks for joining us. I know you have been extremely busy, so we certainly appreciate it. How are you and the auto manufacturers that you work with managing these tariff costs?
Hi, Tim. Good afternoon. Thanks for having me. And we are really focused on control the controllable, and things seem to be changing on an everyday basis. So open the playbooks that we have had during the rotating UAW strikes or COVID or 2008 financial crisis or the chip crisis, and you put them all together. I think that's what we seem to be having right now.
What a way to put that. The financial crisis saw some car companies declare bankruptcy.
Right. Exactly. You're saying it's as bad as that, and then some.
Yeah, I think the important part, Carol, here is part of it is looking at tariffs of importing vehicles cross-border. Okay, the OEMs are the importer of the record. We as suppliers, have to still look at any intercompany parts going across the border, and you have to look at the tier end supply chain. But all in all, even if we look at what we can do internally, all of this is going to lead, I believe, to demand destruction, at least in the short term, which is why I compared it, to what happened during the 2008 and 2009, where the volumes went down drastically, right? And that is the reason for my comparison to that.
As Tim mentioned in the introduction, your top customers, GM, Mercedes, Ford, BMW, VW, Stellantis, Nissan. Are you already seeing, tell me kind of what the environment was going into the tariffs, and then how it's changed in terms of demand from your customers now that the tariffs are here?
Carol, one of the important things in the automotive industry is certainty is stability. Mm-hmm. And what we have today is the complete uncertainty, right? It's difficult to plan in an industry such as ours, on an everyday basis, right? And that's what we're trying to deal with today. You might have seen some of the announcements that have come starting April 14th, some of them starting, last Monday already. Mm-hmm. BMW from the Spartanburg facility, or General Motors from Fort Wayne, Stellantis in Toluca, Warren Truck, Windsor, halted productions or changing production schedules and so on and so forth. So that's the effect we are starting to see. And obviously, it's an industry that you can't flip the switch to change things overnight. If there is a policy roadmap towards whatever the outcome might be, I think that's addressable. But today the struggle seems to be addressing what's coming at us on a daily or hourly basis.
So who absorbs the costs here? What do your shareholders need to know about where customers will see price increases, where you will see a hit to margins, where the end user, right? Us, people who go and buy these cars, will see price increases. Where do the chips fall?
Yeah, it's kind of all of the above, Tim, right? Because, from a supply base as well as the automotive OEMs perspective, everybody look at whatever that can be done. I think that is given. But given the industry and the type of margins that are there, that's out there, everybody knows that. Nobody can handle the, magnitude of the impact that we're talking about here. So I believe it has to, some way, shape, or form, pass on to the consumer. And if you look at where the car prices are today in the market, they're already, stretched quite a bit, right? So that's why I talk about demand destruction and the consumers ultimately facing, if not all of it, a significant part of the impact of the tariffs.
You said it's like the playbooks from the financial crisis, COVID, the UAW strikes, all combined. But I'm wondering if, as a result of this, you are making any big changes to how you do business, where these parts are manufactured. Do you plan, as a result of these tariffs, to do more in the United States?
It's too soon to say that, right? Like I said, we are investing, or not we as an industry, if we are doing investments today, it is typically for starting production in 27 or 28. So we're talking at least 2 years out, right? So when we start talking about what needs to be done, should we react to what's happening today? And where the policy ends up is going to be ultimately what everybody's looking at. So from a near-term perspective, cash conservation and hesitancy or tentativeness to say, where will it end up? So if there is a dollar that I can push out from a perspective of investing today versus a month or 2 months from now, I'll pick the later, right? Because I want to have certainty in where we are,
right?
Ultimately going to invest and get the returns.
I'm sorry. Please finish.
No problem. I think going back, everybody is now focused on free cash flow conversion, capital efficiency. So there is a little bit of a wait and see approach, and in the industry that depends on 2 or 3 year cycles, that's difficult.
Swamy, the thing I wanted to ask you, and I keep going back to this interview that Sonali Basak of Bloomberg did with Boaz Weinstein, and he said, even if we get a change and perhaps the White House, the president comes out and says, forget it, delay of 90 days, or you know what, let's call it off. The problem is that the president's going to be in the White House for the next 4 years, and that what he said is the uncertainty genie is out of the bottle. I can't kind of get away from this. That would you feel if the president came out and said, changed my mind, would you feel confident enough to move forward? Or would you feel like you were constantly a little bit off balance, not sure if something might change from the White House?
I think the industry as a whole is going to be a little bit more conservative and think twice. We have always believed, you have to produce locally, whether it's a local for local. And we have always looked at the entire North American market as one market. So that is being questioned right now. So we have to work very closely with the OEMs, not just I think the whole ecosystem has to be pretty much aligned as you think of investments going forward. Which segment is going to be consumed where do you put the footprint? So in short, Carol, I think there is going to be a little bit more thought before new investment goes into address, especially where parts or vehicles are going cross-border.
Right. So then when we think about the U.S. economy or global economy, there are investments that will not happen. And there will be, as we talked, was it a little bit of a demand destruction? Like there'll be some destruction that economic impact we don't get back, right? Because of that conservative mode.
I think it's fair to say there is going to be tentativeness in the investment cycle now until people get a little bit more clarity. That's one thing. And the second thing is short term, I think there is going to be, reduction in volumes.
I mentioned you have 170,000 employees in countries throughout the world. Stock down about 25% so far this year. You're going to take a hit ostensibly as a result of these. Are you going to have to start making decisions about who keeps their job and who doesn't keep their job?
And Tim, yes. That's the reason why I compared it to what happened during the COVID or the UAW rotating strikes, right? You have to constantly react to how the OEMs are planning their production schedules, whether it's lines coming down, complete, factories, assemblies that are stopping, which means we have to react accordingly. So obviously there's going to be that impact, but we have to, as one of our guiding principles is a long-term strategy to look at our business as a long-term owner. So whatever decision we make, we have to look in terms of today, but making sure that it doesn't hurt us in the long term. So that's a little bit more challenging today than it was a few months ago.
One of the things I want to ask, are you afraid, and do you feel like the C-suite's afraid to really speak out against the Trump administration? You're actually being pretty frank here. CEOs in some surveys are calling this the Trump recession. CNBC did a CEO survey, yet it seems like most don't want their names attached to the criticism of the administration. Is the corporate community afraid to speak out?
Carol, from our side, look, I think Tim mentioned in the introduction, we are in 28 different countries over the last year and a half. 19 of the countries that we are present in had elections, right? So policy is something we deal with all the time. This is obviously a little bit more disruptive than what we have seen elsewhere or seen in my career here. But we have to look at the industry long term, right? Our design cycles are 4 to 5 years, and maybe with the changing industry, it's dropped down to 2 or 3 years. But you got to take a long-term approach. So yes, it's disruptive today, but we have dealt with this in the past, and we just have to keep our head down and hope we look at a policy roadmap rather than react to something that's happening today.
One of the things I do want to ask then, and kind of on that in terms of long-term strategy, what does the auto supply chain look like if the Trump tariffs are here to stay? How long does it take to realign a point that will mitigate tariff costs?
I don't know its mitigation. That is definitely going to lead to rationalization of the footprint, right? We have to start looking at balancing capacity. Luckily we have footprint in Mexico, US, and Canada. So again, like I said, it's not going to happen over time, depending on complexity of the part in the system. It could be anywhere from months to years. There are some complex systems where, just to give you an idea, some of our plants are 1 million square feet facilities, right? With about 300-400 million in invested capital. So those kind of plants are not easy to transfer overnight. Those will take years. And it's not just a unilateral decision either, right? This has to be done in conjunction with the product cycle planning of the OEM. Where is the assembly plant and how are we going to work with them? So there's a lot of complexity involved here. Some of the more complex footprint rationalization might take years to crystallize.
As we're talking, we're seeing stocks continue to fall. How do you watch not your company's stock specifically, but the broader sell-off in the context of consumer demand, the wealth effect, and just concerns to growth?
Yeah, I think that's, like I said, that's the demand destruction part, right? What happens to the industry, interest rates, what happens to the overall economy, the buying power of the consumer, especially with a lot of fear that might come based on what's happening around you, which all means people's ability to buy cars and at what price point. If that's impacted, the whole industry is impacted. And that is the big concern that we all have, right?
Well, we talked a little bit about whether you'd move facilities. You said it's too early to say. We are already starting to see automakers reshoring assembly plants or make announcements. Hyundai was one of the ones we saw from the White House just in the last month. If we see more automakers reshore assembly in the U.S., will you need to move facilities back to the U.S. as well?
We have a footprint in the U.S., but to your point, Tim, yes, I think look as a supply base, we look at the material availability of the entire supply chain, where it's coming from. We have to look at the logistics. We have to be as close, as possible to the assembly based on the type of the part and the complexity of the part. So considering all of that stuff, if there is a significant reshoring, yeah, we have to look at, rationalizing the footprint differently.
Hey, Swamy, just to kind of wrap up here, you kicked off, and both Tim and I were like a wait, what moment when you said that you're thinking about this environment akin to, I think you said the GFC, COVID, and union strikes all together. That's today's environment. So is a recession here in the United States given? Is maybe perhaps a global recession given? A given, I should say.
Yeah, I think, again, hopefully, everybody comes to the table and has the discussion to avoid that. But all indications seem to be, heading in that direction, that the economy is taking a hit. But like I said, it is happening so fast and so quick. Part of it is, who comes to the table at what time, and how much can you recover and how fast can you recover. But that's definitely on the cards based on the facts today.
Well, we really appreciate your honesty and giving us an assessment of your world that really plays into all of the major auto manufacturers. Swamy, thank you so much. Swamy Kotagiri, he's Chief Executive Officer of Magna International, joining us right here on Bloomberg Businessweek Daily.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.